the easiest strategy I have come up with to date. The one that has helped turn thousands of traders from I kind of suck at this to I'm making money, I'm paying my bills, and I'm traveling the world with my kids will be covered in this video. The 10 EMA strategy is the video that a lot of people know me for, and here's the link to that video if you want to get refreshed on it. And this video is also going to be a refresher, but really just kind of walk you through how the strategy can easily work for swing trading. Right now we're looking at Shopify, but let's just pick a totally different trade, even though we got a 10 EMA trade set up right here. 2 bull candles, and the first one's closing below the 10. So if you're looking to short shop, I would say if it closes below here, that would be a pretty good short. And if it doesn't close, we should bounce off pretty soon. But let's go pick another random ticker. Let's do Pinterest. All right, Pinterest. And I'm going to do this little blue line. Let's go back to, I don't know, 2021, August 1st. All right, August 1st, 2021. Click on as quick as I can. Okay. So Pinterest daily chart. Here we go. We got earnings coming up, and we're going to just do the 10 EMA. Let's just repeat it. And to make things even easier, because again, when you start stacking analysis, volume, some moving averages, and you start to blend the 10 EMA with those components, your trading can do so well. It can be straight fire, gasoline up in your household. But if we're looking at just the 10 EMA and nothing else, that's also fine. It really works quite well. In fact, just to analyze some prior trades, right here, first bear candle above the 10. Enter above that bear candle, stop below the bull candle, poof, making some profits. First bull candle below the 10, entry below there, stop below there, poof. You were able to make some money on that drop. Maybe you got out, maybe you're still in. But with earnings right around the corner, let's see what earnings does, and then we'll just start taking the 10 EMA trade, because I don't hold short-term swing trades over earnings. Definitely going to be taking some investments over earnings. This is a bear candle above the 10. Okay, nice drop. And let's see what happens on earnings. Okay, whoa. Big gap down on earnings. All right, cool. Whatever. So now we're waiting for a bull candle below the 10. Let's see if we get the first bull candle. No bull candle. All right, here it is. Bull candle below the 10. I don't think this one's going to trigger. And what's beautiful is the more you do this analysis and the more you start working with what you like to see, the more you'll realize one of the rules and the components of the strategy is the stop needs or should be above the 10 EMA. In this particular trade, again, since it's a bear candle gapping down to retest gap, I'm quite confident we're going to retest and trade higher. But again, for the sake of the 10 EMA, this is the first bull candle below the 10, and I don't think it's going to trigger. Now, if it did, I could take the trade. Another reason I don't love the trade short is because we're at a support right here. So again, I would really expect this to retest some more, but let's just see if this one triggers. So far it doesn't, and there's a short right here. You can see the 10 EMA coming down a little bit more. All right, so that's good. Some bull candles, some compression. This is where I would prefer to be entering in this particular trade anyway, is again, if I zoom in here, just to note, you get this big bull candle. That bull candle is a good support. So preferably, if you're really, really interacting well with timing, getting in on these days, even though you're at the exact same price, you're not really benefiting from getting at a higher price. Your stop loss and your timing of just waiting wouldn't have to be quite as long, because again, it was retest gap. We got a little bit of retest. You got the moving averages coming down. There we go. All right, another bull candle, another bull candle. So now after this many candles of trading, I'm going to take the stop loss and decrease it, because again, it looks to me like at some stage, especially being out of support, we're going to have a retest of the actual 10 itself. Okay, strong bear candle hanging out, nice. Okay, good compression. At this point, we can take our stop loss, we drag our stop down. And again, I'm just going to keep trading this strategy until you guys make me turn off the video. All right, so we're almost at that 1.2 R target. Got a bull candle. Here comes the retest into the 10. There it comes. There's the pop. There's the inside candle. And here's a bear candle. Now, what's really interesting about this bear candle is, dun, 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 it's the first bear candle above the 10 EMA. So again, noticing the type of sentiment here and seeing how parallel the price action was to this moving average, we absolutely knew that it was going to pull into that moving average at some point. Again, can you take this analysis? Can you take this strategy and begin to practice better timing, better entries, and better candidates for the setup? Absolutely. Because realistically, again, if I'm getting in down here, potentially could have a little bit of a tighter stop, would have most likely hit my target, or just been a little bit more aggressive with an exit. Because again, in trading, one of the things that you want to do, ladies and gentlemen, is you want to exit low. You've heard the term buy low, sell high, right? Buy low means if the price goes lower and you're in short, well, buy low. This was the previous low of Pinterest. This right here was a new low, which means if you're in the trade bearish and you're able to buy low there, you are buying lower than the previous pivot, which means you are fulfilling the buy low portion of that formula made very famous by your boy, Warren Buffett. So when you're in a position short, and if that position makes a new low, that's a good time to buy, right? That's how you exit your position. You'll actually notice really quick, here's a pivot, here's a lower move. If you bought to cover there, you made profit. Here's a pivot, here's a lower move. If you bought to cover there, you made a profit. Here's a low right here. If you bought to cover when it made a new low, you made a profit. And again, it eventually bounced. Oh, and yeah, there was your 10 EMA bear candle above, first bear candle above the 10 EMA. So buy low, sell high. It's a beautiful, beautiful strategy and a way to kind of implement everything from a profit standpoint. What I would do on this particular trade is, again, if I'm just being extremely strict with the strategy that I'm covering for here, this stop would pretty much be break even. So you wouldn't really lose anything. And then this is a first bull candle above the 10. So that's a long. Stop loss needs to be below the 10 EMA and below a strong bull candle, which will be right there. And let's see how this trade works out. Does the trade trigger, exit my short or enter my long? Nope, not yet. And now it does. So now you get the bull candle. You triggered your exit for your short trade, and now you're in bullish. We have another bear candle closing above the 10 EMA, which is nice. Again, if you're not already in the trade, this can give you sentiment to set up a trade to get in long. And if you are in the trade bullish, which I am, right? I lost essentially nothing on the first trade. This tells me getting in above the high of this candle would be nice. But if I'm already in the trade, a push above the high of that candle, a push above that upper shadow, a push of some of these upper shadows, moves above there will/should trap some more shorts, and the trade should work out. Another hammer, trade's not working out. Stopped out, first bull below the 10 EMA. Short below, stop above the 10 and above a bear candle. So again, this trade, you're only getting triggered in if it goes lower than the low of a bull candle or higher than the high of the bear candle, right? That's the strategy. First bear above, first bull below. Do we get triggered in the short? The answer is nope, not yet, because it has to move lower than that bull candle. We get triggered in, nice hammer, really nice hammer, actually. Another bear candle, another relatively cute little hammer. So just for clarity purposes of the chart, let me just delete these two drawings. So I'll keep tabs of where I'm at. So I'm down one risk unit. So we broke even on the first trade. And again, easily could have exited a little bit lower and locked in some profits. Now I'll kind of draw this little trend line here. So we got a little bit of a triangle, some compression building. So something like that on Pinterest. All right. But again, that's just me seeing it. I'm still down 1R, just waiting for the strategy to play out. Another bull candle. This is an inside candle, so some pressure certainly building here. Another bounce up and a really, really beautiful gap down. That's a nice gap. You had a bunch of bulls that are trapped at that particular point in time. You could likely lower the stop loss if you wanted to. I would like to go for more than 1R of profit if we can on this trade, because we lost on the previous trade. So now we're able to lower the stop. What you'll notice, again, using this strategy is our stop loss is still above the 10 EMA. So the 10 is really going to be kind of like your metric for tracking the overall system. And what do we get here? Oh, this is so cool. I love it. I love this stuff. Remember, these are daily charts, right? These are daily candles. So we've already been trading. How long have we been trading? This would be a month and a half worth of data. So a month and a half has already gone by in this simulation, in this example. And on this particular trade, if you're in a position, which you would have been, you would have been able to see in real time that this is a low, right? This low right here, this prior low. And what did we do right here? We made some new lows. So if you're in short, again, with that new low, again, looking at your charts, looking at your position that night, with the markets are closed, when there's no real massive emotion or fear or anything of that nature, you're able to potentially set in maybe some partials, some orders to exit some of your bear positions to lock in some gains. All those things would be great. Bull candle, again, bouncing off of that low. Nice little upper shadow, which is where I'll be moving the stop loss to. All right, so taking the stop loss down, putting it above that candle. Really thinking and kind of feeling like we're going to bounce off of that new low because that's, the way stocks work. Nice upper shadow. Did not close above the moving average. Another hammer. Another bear candle. And again, check it out. Another new low where buyers are coming in. That's the way it works. Buy low, sell high. Okay. Strong close. Bull candle. So again, depending on your stop loss protocol here, if we're taking the stop, I've exited partials in a real trade a few different times. New stop loss. Big gap up, and target hit. Now again, with that particular move, notice if you put your stop loss into break even, how did this example know that, that exact thing, that you would have had your stop at break even? Because there's tons of people that are playing this pattern, not just you, and that's what they're doing, right? You have people who move their stops to break even. I don't want to do that. I don't think you should do that either. Ultimately, either lose a little bit or win a little bit. If you're going to move your stop to break even, right? So if you're on this particular candle and you move your stop to break even, just get out of the trade. Just take your profits. Just go ahead and exit. So this particular trade was a 1.5 hour win total, except I would have exited some partials. So realistically, would have gotten like 1.2, 1.3 Rs on that particular trade. And again, since this is a daily chart, depending on how much fun you're having with this and how much you are practicing the strategy and how competent you are with the strategy, there's a few different times where you could have played, re-entered, re-exited, things of that nature. Because again, really strong hammer, close below the strong hammer. This candle is also a bull candle closing below the 10. This is an area to short. There's your shooting star, failing the 10. This is a beautiful short. Could have been a day trade. I love this strategy because this strategy shows you realistically where the momentum is, right? All right, beautiful exit, by the way. Good job, Newsome. Waiting for a bear candle to close above so that we can look for a long. Where are we? Okay, so we've made some new lows. Looks like every time we make new lows, we get bought up. Waiting for a bear candle. Oh, we got a bear above. We got a bear. So this is the first one. Bear candle closing above. Entry there. Stop loss there. I really love that trade. Not triggered in. Not triggered in. Still waiting. Another bear above, allowing us to actually lower our entry, which is nice. So we're able to buy lower and keeping our stop relatively the same price. But again, I'm keeping my stop at this stage below this bull candle and below that bull candle there. Pop, lock, and drop it. Oh, we're in. We're in the position. Looking nice. I like that. Another bear. Oh, yeah. This is pretty. Bear closing above the 10. Strong close. With this particular candle, in my opinion, I'm just increasing the stop a little bit. Let's increase that stop. Taking it to here. Now, again, most traders in this position, where they're going to put their stop, they're going to put their stop either here, here, or here. I'll move my stop to there eventually, but I always want to ask myself, what's everyone else doing? Most likely, just do the exact opposite of that. So I'm going to give this some time. I will be out before earnings, though, in this particular bullish trade. Oh, come on. Oh, my goodness. That's a nice position. Like that move. Now, if you're asking why am I going for this particular target, really just trying to target up into here. If I want to go for 1.2, wow. We missed 1.2 by a few pennies anyway, which just means I would have to have a new target. People in trading, real life trading community will know that as a Newsom nudge. So that target right there brings us up to 1.4, which is the low of this bull candle, which is the high of these resistance areas over there. Again, with that particular strong bull candle, and again, being a whole brand new day, I would take my stop. I'd move it a little bit, and I'd put it below the low of this candle, building my holding muscle. That's what I'm doing right there. And, oh yeah. I love this strategy. It's a great strategy. Once you really know, see, feel, and really understand at depth why it works and how it works, and you can start seeing that compression, you can start seeing the candles, and you practice a little bit. All right, this thing is a no-brainer. It's really easy. And yes, absolutely, you can build indicators for the strategy. You can scan for the strategy. In my opinion, just really master it and practice it a bunch on a couple of stocks, and then just use those stocks. And when you see the particular strategy, implement it, because that's a really, really nice move. In fact, in all transparency, I'm absolutely making some pretty decent cash flow on Pinterest going down. But on this trade, I would have doubled in a little bit, because that's a bear candle that is closing above the 10 EMA. That's an inside candle. I would have added to my trade. I would have sprinkled some additional risk on that particular position, and that would have been an absolute banger of a move. I mean, I just love trading. I love this stuff so much. Print these charts out. What do you use as wallpaper? Is your house currently littered with charts? It needs to be. Print them out, study them, dream about this stuff, because it works not only on stocks, it works in crypto, it works in Forex, it works in different time frames. It's an incredible strategy. And the more you practice any strategy and the longer you stick and pick to a strategy, generally the more money you'll make, and you'll also start understanding what you should do and what you should not do. You're going to learn more of that as well. So I hope you enjoyed this video. Another review of the 10 EMA. My mission, of course, is to enrich lives. If you feel like I impacted you and your trading today, hit that subscribe button, hit a like, and throw in a cool comment of some kind and tell me what other video you would like me to make for you to help your trading, help your family, and help your cash flow. You rock.